Stocks trade firm after hope of a Fed rate cut keeps US equities upbeat. Industrials and auto notched some gains while FMCG and realty soften.
The board of Infosys has approved an 18,000 crore rupee share buyback, the biggest till date and almost twice the size of its previous 3 buybacks. The tender offer price of 1,800 rupees a share is a 20% premium to Thursday's close.
Veteran investor Manish Chokhani says the market is being held up by price-agnostic retail flows even as PE and promoters sell down. A turn in sentiment, he adds, can hurt investors with a less than 3-4 year horizon and over 15% return expectation.
US Commerce Secretary Howard Lutnick tells CNBC he's focused on India for a trade deal, but India needs to open up and stop buying Russian oil. Indian Commerce Minister Piyush Goyal reiterates the first tranche of the US trade deal should be stitched by November. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios, the final 2.5 hours of what has been an extremely promising week for the bulls. I'm Hormuz Fatakia. With me as always is Vamakshi Dhuria. Vamakshi, good afternoon. And it's a happy Friday for the bulls so far. We crossed 25,000 yesterday. We've crossed 25,100 today. And all eyes are now on the 21st August swing high, which is 25,154.
Absolutely. Good afternoon to you, Hormaz. Yes, the markets are doing extremely well in today's trading session. It's a century for now. And you know what's actually moved up in trade today is, take a look at Shriram Finance. That stock is, has picked up momentum. So has ICICI Bank, Bajaj Finance, just some of these names that are doing extremely well in trade today. On the flip side, take a look at Trent because that stock saw sharp selling pressure, just in the last couple of minutes. That stock, yes, as you can see on your screen, was trading in the positive, but it has slipped into the negative, down almost 0.5%. You know, the mid-cap end of the market, though, is not doing as well. Remember, the advance decline ratio, even though if it's in favor of the advances, it's still 1:1. The mid-cap end of the market is not performing at all. Other than that, what's actually doing well today is the Nifty Auto Pack. All of these counters are surging in trade. Take a look at JBM Auto. That stock is up over 10% in trade today, Hormaz.
Indeed, the advanced decline lines are converging. Just an hour ago, they were running at a parallel railway track, but they seem to be converging right now. What is also doing well today, though, is defense. All of these names, MTAR Technologies, Gardenry Chip Builders, BEML, Apollo Micro, all of them trading with gains of anywhere between 11 to 12% now. MTR Technologies is now up 13% at the highest point of the day. So sharp surge seen in MTAR Technologies. Of course, we spoke to the management yesterday and they highlighted the fact that they are aiming to double their revenue by FY28 and to around 1,600 crore rupees. So a positive trigger coming in there from the management. So 1728 on the stock, 13% higher over there. But there are some losers as well on the downside in today's session. Paradeep Phosphates has had a forgettable week. 6.5% lower on that stock. Sagar Cements is down. Cement stocks in general are not doing well. Sagar Cements is down 4. Heidelberg is down 4. So some of these mid-cap cement names not having a very good session. Metropolis is down 3% as well. So a lot of these cement names, some pharma names and Oracle also continuing to see some profit booking. And Ola Electric, of course, another 2% shaved off on that stock, is back below the 200-day moving average. Is Ola Electric. So 56.60 on the stock, 2.5% lower in today's session as well. But of course, the big news from last night and the story of the morning was Infosys announcing its largest ever share buyback, 18,000 crore rupees size, where it will be buying back 10 crore equity shares, price at 1,800 rupees. Rima is here with all of those details.
Thanks so much for that. So as you rightly pointed out, Infosys in focus on the back of its largest ever buyback, 18,000 crore rupees, much higher than market estimates of 14,000 crore. It's a tender buyback. The company will buy back 2.4% of the outstanding equities at a price of 1,800 rupees per share, which is a 19% premium to where the stock closed yesterday. Now, this is the company's largest ever buyback, the 5th one so far, and it's the size which has taken the street by surprise because higher than estimate, and it's practically double of the buyback size, of the last one, which was in 2022.
Rima, thank you for that update. The other big story of the morning has been these capital market names. They were down yesterday and they also were, because of the CNBC TV18 news break on the weekly expiries. Of course, all eyes are on the SEBI board meeting later this evening, and Jefferies has done a very interesting scenario analysis on the potential impact of, in case the expiries are elongated, and what will that have an impact on stocks like BSE and Nuvama Wealth. What is Jefferies saying, Vamakshi?
Well, absolutely, Hormaz. Yesterday, Yash broke that story in which sources were suggesting that SEBI is likely to float a consultation paper within the next month to phase out weekly F&O contracts. In fact, SEBI is weighing a transition to monthly expiries is what sources were suggesting, and the regulators were also likely to consider a same-day expiry across exchanges. So this is what our source-based story was. But on the back of that, there was a scenario analysis that was done by Jefferies, and they've assessed various scenarios. So the first scenario that they've assessed is the fortnightly expiry. Now, in such a case, the overall industry index options notional ADTO could decline by almost 55%. The industry premium average daily turnover could decline by 45%. Now, there are two parts here. If the expiry is on different days for both the exchanges, BSE's market share is likely to remain stable at 29%, but the options revenue is likely to decline by almost 38%, resulting in a 22% fall in revenue and a 21% impact on its profitability. Now, on the other hand, if there is a same-day expiry in the fortnightly expiry, the market share is expected to decline from 29% to 20%. The options revenue is expected to be impacted by 57%, total revenue down 33%, and the net profit could be impacted by a much larger portion of almost 35%. The other scenario is under monthly expiry. Now, under this scenario, it's a much sharper impact is what Jefferies is expecting. Industry notional average daily turnover could decline by as much as 80%, premium could decline by 70%, and expiry on different days, if we consider that, the market share remains stable. On the flip side, if there's a same day expiry, the market share falls to 18%, and the options, revenue, total revenue, profit, all of them are on the screen, and such a huge impact is what Jefferies is expecting if the expiry moves from weekly to monthly. And as far as Nuvama is concerned, they believe that if we transition to fortnightly expiry, profit impact of almost 15%, and if it's a monthly expiry, then the profit impact could be around 25%. Just to sum it up, the potential impact for BSE could range between 20 to 50% as far as FY25 EPS is concerned, and 15 to 25% as far as Nuvama is concerned. So those were some of the names that we're focusing on. But Ria is here with a roundup of all of the other stocks which are buzzing on the back of news flow. Ria? Ria, over to you. All right, moving on then. Yeah, I think there was some technical issue out there, but amidst early signs of easing of trade tensions between the United States and India, Commerce Secretary Howard Lutnick said that India must make meaningful concessions, starting with reducing its reliance on Russian crude to maintain strong economic ties with the United States. Let's listen into that.
We're going to sort out India. India basically has to open their market, has to stop buying Russian oil. People don't remember, India didn't buy Russian oil before the war with Russia and Ukraine. They had 1% of their oil was from Russia. And now 40% of their oil is from Russia because we've sanctioned it so they can buy it, $7, $10 a barrel cheap. So they're buying it, refining it, and then selling it to the rest of the world and making a bundle. So the president called nonsense on that and said, you got to stop that stuff. So I think India will sort it out once they stop buying Russian oil.
We'll take a short break, but just as we do that, here are some views from our market master of the day, Manish Chokhani of Enam Holdings, who expects the final US tariff on India to be around 20%. He's also a little cautious on the Indian markets. Listen to what he had to say.
What's happened with US and India was a surprise to everyone, I think, including to the protagonists over here.
Yeah.
Something changed during Sindoor.
Yeah.
And then I'm guessing something's changed over the last 1 week again to bring things back to what looks like even keel. But yeah, I mean, if you zoom back in a larger context, India and US have been the two best performing markets in the world, the best democracies and the best sort of places for capitalism to thrive. Even if you get to the 15 which the allies have, which is Japan, Korea, UK, I don't think we get to 15, but if you're at 25 and you have some way around that, let's see, maybe we end up at 20. This market was being driven or is being driven really by price agnostic domestic flows. There are opportunities in the market, but overall it's a market which is very optimistic. Like I said, strategics are out, FDI investors are out, PE investors are out, a lot of Indian promoters have sold their stakes down. And the market's being held by price agnostic retail flows. And if a mood changes a bit over there, and I hope it doesn't, then we are in some, then you have to wait for the next cycle where you have similar optimism, which may be 3 years, 4 years later.
Welcome back. You're watching Business Lunch on CNBC TV 18. Now shifting focus to that much anticipated August inflation print for India. Now a CNBC TV 18 poll forecasts a spike in that headline number. Retail inflation now is expected to come in at 2.2% for the month of August. Now this is following that 1.55% in July and 3.65% same time last year. Now remember, despite the likely spike, inflation will remain below the Reserve Bank's 4% target. Food inflation, meanwhile, is seen flat versus a decline to 1.75% in the month of July and 5.66% in the same time last year. Now the CNBC TV 18 poll also indicates no change in the core inflation print, which excludes the measure of food as well as fuel. Core CPI for the month of August is seen at 4.2%, which is broadly in line with a similar show in July.
Staying with the macros then, the US CPI also came in higher than expected in August. Jobless claims accelerated, presenting mixed signals for the Fed ahead of its policy decision next week. CNBC's Rick Santelli brings us the fine print.
Let's look at initial jobless claims, shall we? Now, given there's seasonalities when you have things like Labor Day, holidays, but ultimately, just on the surface, 263,000 on initial claims. That's the biggest number going back to the fall of 2021. And it doesn't end there. We also had, of course, our August read on the Consumer Price Index. And that inflationary group of data points was warmer than expected. However, let me rephrase. It was very close to expectations, but sequentially warmer. Meaning, 0.4 on the month over month, that's higher than last month, but as expected. Take out food and energy, the core, 0.3. A little hot based on history, higher than our last look, but as expected. If you looked at the year-over-year headline, 2.9. As expected, hotter than the rearview mirror by 0.2. The only number that wasn't hotter, that was equal expectations and equal sequentially to the rearview mirror, was year-over-year core at 3.1%. But that's a 3 handle. The Fed's objective is 2%, and I know that the PCE is closer to 2.5, 2.6, their favored inflation gauge, but it seems to me that we see a market in equities continually making new highs. We see an interest rate complex that looks like rates want to go lower, but the 10-year seems to be fighting to stay above 4%. Ultimately, I think we're trying to match the data with the market performance. And I believe that the interest rate complex may find more selling going into the weekend, because I thought many traders looking at the flattening yield curve were expecting the 4% level to be breached in a much more significant way than the 1 basis point we saw today after the 8:30 numbers. As for tomorrow, University of Michigan sentiment, and that will be the end of an important week. And this week in particular, not only the last week of important top-tier data. We've had the job report, PPI, CPI, PCE data, which means it's up to the Fed next week on Wednesday to decide. 25 basis points is built in. They'll give us 25. Many thought we could see 50 with the data points today, but if the market doesn't price it in and Fed guidance doesn't allude to the fact that it is or isn't priced in with respect to whether they believe it to be accurate this close to a meeting, no surprises. 25 basis point cut most likely on Wednesday.
Well, absolutely. That is what the market will be hoping for. But let's also hear what economists had to say about the CPI data and the market's reaction to it.
It's going in the wrong direction, that's for sure. I do think we're seeing some tariff price pass-through. Core goods inflation has accelerated over the past couple months, which is where you would expect to see that tariff price pass-through. So, it does look like, as was mentioned earlier, the core PCE number, which is what the Fed focuses on, that's going to hang out pretty close to 3%, we think, when we look at both the CPI and the PPI together. So that's not a great story. On the other hand, I think there's clear evidence that the labor market is weakening, and that seems to be taking precedence in the Fed's thinking here. I'm not so worried about this morning's claims number. It seemed to be a lot concentrated in Texas, looked a little fluky. But last Friday, we did see an ongoing rise in the unemployment rate. And I think that's going to be, the real story here, because if that really continues, of course, then the downward pressure on wages presumably would halt any worries we're going to have about inflation in, 6, 12 months from now.
Certainly, we have seen that with the inflation numbers today, the Fed is probably not going to be cutting rates by 50 basis points in September. However, it did add another rate cut this year to 3 rather than our earlier expectation of 2. So I think that would be an encouragement. Also, when you look at the fact that we are seeing new all-time highs, not just here in the U.S., but also overseas, that is a confirming factor that tends to improve the average price performance 3 months out, as well as the frequency of advance, to the point where I think investors really are trying to find reasons to sell stocks when, in fact, that's probably what's going to continue to support and maybe even propel them.
Take a short break here on Business Lunch. More news and updates follow on the other side. Stay tuned. Welcome back. Today marks 3 months of the tragic crash of Air India flight AI 171 in Ahmedabad that claimed 260 lives. The Aircraft Accident Investigation Bureau blamed the movement of the fuel control switches from run to cut off during the takeoff to have caused the aircraft to crash. While the final report is still awaited, the preliminary findings have triggered a debate over whether the switches were deliberately moved or was it a system error. So where do things stand in terms of compensation that was promised by Air India? My colleague Madhiya Mujawar joins in with the latest. Madhiya.
Air India says that interim compensation has been released to the families of 207 of the 229 deceased passengers, as well as the 19 victims on the ground so far. Remaining families are yet to submit their documents required for the claim. The delay could be due to differences within the family on the distribution of compensation. We have spoken to some families where all the deceased have not received the compensation of 25 lakh rupees due to such differences among family members. The Tata Group, which owns Air India, had separately announced 1 crore rupees compensation to be disbursed through a dedicated trust. In August, the group formally registered the AI 171 Memorial and Welfare Trust. However, no disbursement has begun yet from this trust. Meanwhile, American law firm Beasley Allen says it is representing over 100 families of the crash victims. The firm is preparing a lawsuit against Boeing. They have filed a Freedom of Information Act request with the U.S. Federal Aviation Administration to obtain data from the aircraft's flight data recorder. According to Beasley Allen, Indian authorities have already shared this data with the FAA, and the lawsuit against Boeing will depend heavily on the evidence found in this data. Now, Beasley Allen also indicated that some families are preparing to file cases in the UK under the Montreal Convention, which governs airline liability in international air travel. Now, families will likely file individual cases within the next 4 weeks in the UK courts with Beasley Allen as their legal representative. However, not all families will qualify to claim compensation under the Montreal Convention. Families must demonstrate that the ticket was booked in the UK, the ticket was paid for in the UK, the deceased was a UK citizen or had clear intent to stay in the UK for the long term. Having a one-way ticket to the UK strengthens the claim as it suggests the intent of the deceased to stay for a longer period. The compensation amounts will differ family by family depending on individual individual cases and circumstances. Now, victims killed on the ground because of the crash and the 12 Air India crew members are not eligible under the Montreal Convention claims. So that is the update on the AI-17 crash so far.
Well, Madhya, thank you so much for bringing us all those updates 3 months since that unfortunate incident. But moving on then, C.P. Radhakrishnan earlier this morning took oath as the 15th Vice President of India at a ceremony at the Rashtrapati Bhavan. The oath was administered by President Draupadi Murmu and the ceremony was attended by senior leaders including Prime Minister Narendra Modi and Home Minister Amit Shah. Former Vice Presidents Jagdeep Dhankar, Venkaiah Naidu and Hamid Ansari were also present.
And with that, we call time on this edition of Business Lunch, the final one for the week. Vamakshi and I take your leave. Thank you so much for watching. Midcap Radar on the other side.